CK Hutchison's risky port ventures, an unconsulted decision that sparks political backlash in China. Overview of the situation. On March 14, 2025, CK Hutchison Holdings Limited, a major global player in port operations, announced a strategic decision to sell its port assets valued at approximately $22.8 billion, which includes significant terminals such as the Port of Felixstowe in the UK. This move, intended to streamline operations and focus on core investments, has ignited a significant political backlash in China. The Chinese government and state-backed media have condemned the sale, framing it not merely as a business transaction but as a betrayal of Chinese interests and a threat to national economic security. Key points of backlash. 1. Critical media response. The reaction from Chinese state media has been swift and severe. Articles appearing in major outlets have characterized CK Hutchison's decision as a betrayal, arguing that it undermines China's strategic economic interests and reflects poorly on the company's commitment to its partnerships within China. The strong language used in these articles indicates a deep-seated discontent with foreign companies that are perceived to be abandoning their commitments to the Chinese market. 2. Political ramifications. The backlash extends beyond media criticism into political ramifications. The Chinese government is likely to view this divestment as a threat to its port management strategy, raising concerns over foreign influence in critical infrastructure. This could lead to increased scrutiny of foreign investments and operations, influencing how international companies conduct business in China moving forward. 3. Public sentiment. The negative media portrayal has resonated with the Chinese public, further complicating CK Hutchison's situation. There is a growing skepticism towards foreign companies operating in China, and the public sentiment can impact CK Hutchison's reputation and future business opportunities in the region. Calls for greater vigilance regarding foreign investments have emerged, signaling a potentially hostile environment for international firms. Timeline of events. Initial announcement. On March 14, 2025, CK Hutchison publicly announced its decision to sell significant port assets as part of a broader strategy to raise capital and reallocate resources towards core investments. Media backlash. Within hours of the announcement, critical commentary flooded Chinese state media, framing the sale as a betrayal of trust and detrimental to national economic interests. Public reaction. As the media criticism intensified, public opinion began to shift against CK Hutchison, with social media platforms buzzing with discussions on the implications of the sale and increased distrust towards foreign enterprises. Differences between sources. The analysis of the backlash differs among various sources. Source 1: Reuters focuses on the immediate financial impact, noting a drop in CK Hutchison's share prices following the announcement and media criticism. This illustrates the tangible repercussions in the financial markets due to political backlash. Source 2: World Cargo News provides a more in-depth examination of the media portrayal of the sale, emphasizing the emotional and political implications of the backlash. This source highlights the narrative of betrayal and its significance within the context of Chinese nationalism and economic sovereignty. Source 3: Port Technology offers a broader perspective on the operational strategies of CK Hutchison, discussing the implications for maritime logistics and the global port industry. This source contextualizes the sale within the larger framework of international trade and investment trends. Conclusion. CK Hutchison's decision to sell its port assets, while a financial maneuver aimed at optimizing its business portfolio, has unleashed a complex web of political and public backlash in China. This situation underscores the precarious balance that foreign companies must maintain when operating in China, where business decisions can have profound geopolitical consequences. As the company navigates the fallout from this decision, the implications for its future in the Chinese market as well as for the broader landscape of international business relations remain uncertain and fraught with potential challenges. Implications for the future. The controversy surrounding CK Hutchison's port sale could signal a turning point for how foreign companies are perceived and treated in China. As the Chinese government reassesses its approach to foreign investment, companies operating in the region may need to adopt a more cautious and consultative approach to their business strategies. The incident may also catalyze a re-evaluation of existing partnerships and investments. As firms weigh the risks of geopolitical backlash against the benefits of entering or maintaining a presence in the Chinese market. In conclusion, CK Hutchison's port asset sale serves as a cautionary tale for international companies, highlighting the importance of aligning business strategies with local political and social sentiments. The unfolding situation will be closely monitored by industry stakeholders and may influence foreign investment dynamics in China for years to come. CK Hutchison's decision to sell its port assets valued at approximately $22.8 billion has sparked significant political backlash in China, illustrating the complex interplay between international business and geopolitical relations. The sale, which includes notable assets such as the Port of Felixstowe, is part of CK Hutchison's broader strategy to streamline operations and focus on its core investments. However, this move has been interpreted in China as a betrayal of trust and an affront to national interests, leading to fierce condemnation from state media and raising questions about the future of foreign investments in the country. Critical media response. The backlash began almost immediately after the announcement, with Chinese state media labeling the sale a betrayal. This characterization highlights a counterintuitive aspect of the situation. While CK Hutchison's decision is positioned as a common corporate strategy aimed at optimizing financial performance, it is being perceived in China as a politically charged action that undermines the country's strategic economic goals. This reaction underscores the sensitivity surrounding foreign ownership of critical infrastructure in China, where such assets are often seen not merely as business ventures but as components of national security. Political ramifications. The criticism from state-backed media suggests potential political consequences for CK Hutchison. The Chinese government may view the sale as a threat to its port management strategy, which could lead to increased scrutiny of foreign investments and heightened regulatory barriers for companies operating within its borders. This is a notable point of tension, as foreign companies often operate under the assumption that their business strategies will be evaluated purely on economic grounds without considering the political implications that may arise in contexts like China. Public sentiment. The media backlash has resonated with the public, amplifying skepticism toward foreign enterprises in China. This development is counterintuitive because one might expect that a corporate divestment aimed at financial optimization would have a more muted public response. Instead, the combination of state media's framing and the public's reaction indicates a growing nationalist sentiment that views foreign companies through a lens of suspicion, especially when it concerns significant economic assets. The fallout from this situation could damage CK Hutchison's reputation in future business relations in the region, challenging the notion that corporate decisions can be insulated from the political landscape. Timeline of events. The sequence of events surrounding CK Hutchison's announcement illustrates the rapid escalation of backlash. 1. Initial announcement. The decision to sell was framed as a strategic move to raise capital and refocus on core investments. 2. Media backlash. Almost immediately, critical articles appeared in state media framing the sale as a betrayal of trust towards China. 3. Public reaction. This media criticism spilled over into public opinion, with growing calls for vigilance regarding foreign investments. Differences between sources. While all sources agree on the backlash from Chinese state media, they differ in their emphasis on various aspects of the situation. Source 1 focuses on the immediate financial impacts, noting the drop in CK Hutchison stock prices following the announcement. Source 2 delves deeper into the emotional and political implications of the sale, emphasizing the betrayal narrative. Source 3 takes a more technical approach, discussing CK Hutchison's operational strategies and the broader maritime logistics context. Conclusion. CK Hutchison's port sale exemplifies the intricate relationship between business decisions and political ramifications in China. Although the move was intended as a financial maneuver, it has triggered a complex web of political and public backlash, demonstrating that foreign companies must navigate a sensitive environment where business actions can have significant geopolitical repercussions. The situation remains fluid, with uncertain implications for CK Hutchison's future operations in the Chinese market and the broader landscape of international business relations. In summary, the counterintuitive nature of this situation lies in the unexpected political fallout from what is typically regarded as a straightforward financial decision. The strong emotional and nationalistic responses from both the media and the public in China reveal a landscape where business and politics are deeply intertwined, challenging preconceived notions about the separation of economic strategies from geopolitical realities. In the context of CK Hutchison's decision to divest its port assets valued at approximately $22.8 billion, several key points of significance are often overlooked, which could have far-reaching implications for both the company and the broader geopolitical landscape. 1. The emotional and nationalistic undertones of the backlash. One of the most significant aspects of the backlash that is frequently understated is the emotional and nationalistic sentiment embedded in the criticism from Chinese state media. The labeling of the sale as a betrayal is not merely a rhetorical flourish, it taps into a larger narrative of national pride and economic sovereignty. In a country where the government often promotes a narrative of self-reliance and resistance against perceived foreign encroachment, such a portrayal resonates deeply with the populace. The significance of this emotional response lies in its potential to galvanize public opinion against foreign investments in China. This could lead to increased scrutiny of foreign companies, not just in terms of their operations but also regarding their alignment with national interests. For CK Hutchison, this means navigating a landscape where public sentiment can shift rapidly, impacting their reputation and operational viability in the region. 2. Implications for foreign investment policies. The political ramifications of CK Hutchison's decision extend beyond immediate media criticism to potential shifts in China's foreign investment policies. The Chinese government's response to the sale signals that it may become more protective of its strategic assets, particularly in sectors deemed vital to national interests such as logistics and infrastructure. This is significant because it indicates a possible trend toward a more isolationist stance regarding foreign investments. As China continues to develop its own capabilities and technologies, foreign companies may find it increasingly challenging to operate within the country, especially if their actions are perceived as contradictory to Chinese economic goals. This could lead to a chilling effect on foreign direct investment, with companies reassessing their strategies in light of potential backlash. 3. The economic impact on CK Hutchison. While the immediate focus of many reports has been on the political and public relations fallout, the economic implications for CK Hutchison are also critical. The company's stock prices have already reacted negatively to the backlash, reflecting investor concerns about the potential long-term viability of its operations in China. However, the nuanced understanding of how this divestment might affect CK Hutchison's broader business strategy is often overlooked. The sale is part of a broader trend of divestment by companies looking to streamline operations. However, the perception of CK Hutchison as a company that is abandoning its commitments in China could lead to a deterioration of relationships with other stakeholders in the region, including local governments and partners. This may hinder future business opportunities and collaborations that could have been mutually beneficial. 4. The role of media narratives. The media's portrayal of CK Hutchison's decision plays a crucial role in shaping public perception and government response. While several sources report on the backlash, the nuances in media narratives often escape attention. For instance, the emphasis on emotional language in state media may serve not only to criticize CK Hutchison but also to reinforce the government's control over public discourse regarding foreign entities. This highlights the significant power dynamics at play, where state narratives can influence public opinion and in turn affect corporate strategies. Understanding the media's role in this backlash is vital for foreign companies operating in China. They must be aware that their actions are subject not only to regulatory scrutiny but also to public perception shaped by state-sponsored narratives. 5. The broader geopolitical context. Finally, the situation surrounding CK Hutchison's port sale must be viewed within the broader geopolitical context. China's growing assertiveness on the global stage has implications for how foreign companies operate within its borders. The backlash against CK Hutchison could be indicative of a larger trend where economic actions are increasingly intertwined with nationalistic sentiments. This situation is significant as it may signal a shift in how global companies approach their business strategies in China. Companies may need to adopt a more cautious and culturally aware approach to navigate the complexities of operating in an environment where economic policies are heavily influenced by political and social narratives. Conclusion. The political backlash against CK Hutchison's port asset sale underscores the intricate interplay of business politics and public sentiment in China. The implications extend beyond immediate financial concerns, touching on national pride, foreign investment policies, media narratives, and broader geopolitical dynamics. For CK Hutchison and other foreign companies operating in China, understanding these nuances is crucial for navigating an increasingly complex business landscape. The potential for reputation damage, shifts in investment policy, and the overarching influence of state narratives presents challenges that require careful strategic consideration. The situation surrounding CK Hutchison's sale of its port assets has sparked significant political and public backlash in China. Below are the 4 most valuable points that merit in-depth analysis and discussion. 1. Critical media response and national sentiment. The immediate reaction from Chinese state media has been overwhelmingly negative, framing CK Hutchison's sale as a betrayal of Chinese interests. This characterization resonates deeply, as it taps into broader national sentiments regarding foreign investment and control over critical infrastructure. The portrayal of the sale as a betrayal suggests a narrative where the actions of foreign companies are viewed through the lens of national loyalty and economic sovereignty. This point is crucial for understanding how media narratives can shape public opinion and influence government policy, particularly in a context where national pride and economic security are paramount. 2. Political ramifications and foreign investment scrutiny. The political implications of CK Hutchison's decision extend beyond media criticism. The sale is likely to provoke a more stringent examination of foreign investments in China, particularly in sectors deemed strategically significant. The Chinese government may perceive this move as threatening its port management strategy and overall economic stability. An analysis of how this situation may lead to increased regulatory scrutiny on foreign investments could provide insights into the future landscape for international businesses operating in China. It raises questions about how foreign companies can navigate the complex relationship with the Chinese government, especially in times of geopolitical tension. 3. Public sentiment and reputation risk. The backlash from both the government and state media has reverberated through public sentiment, leading to a growing skepticism toward foreign companies operating in China. This shift in public opinion could have lasting effects on CK Hutchison's reputation, not only in China but also in its global operations. A deeper examination of how public sentiment can influence corporate reputation and operational viability is essential. This point invites discussion on the importance of corporate social responsibility and the need for foreign firms to align their strategies with local expectations and sentiments to maintain a favorable standing in foreign markets. 4. Broader context of international business relations. Finally, the incident underscores the fragile nature of international business relations, particularly in politically sensitive sectors. CK Hutchison's decision to divest significant assets can be seen as a broader trend among global companies recalibrating their investments in response to changing geopolitical climates. This situation provides an opportunity to explore the dynamics of global trade investment strategies. and the political risks that multinational companies face. Analyzing how geopolitical considerations are increasingly influencing corporate strategies can yield valuable insights for businesses operating in similar contexts. Conclusion: CK Hutchison's port asset sale is not merely a financial maneuver, it is a complex case study that highlights the intricate interplay between business decisions and political realities in China. The critical media response, potential political ramifications, changing public sentiment, and the broader implications for international business relations all warrant thorough discussion and analysis. Understanding these factors is vital for foreign companies aiming to navigate the complexities of operating in China and other politically sensitive markets. 1. The British Nationality Act of 1948 and post-war immigration. The enactment of the British Nationality Act allowed citizens from Commonwealth countries to settle in the UK without restrictions. However, as large numbers of immigrants arrived, particularly from the Caribbean, political backlash emerged against this influx. Many in Britain viewed the situation as a challenge to national identity and resources, leading to increased scrutiny and political discourse surrounding immigration policy. This scenario mirrors CK Hutchison's situation, where external decisions led to domestic political fallout and public sentiment against foreign involvement. 2. The sale of the Panama Canal. In the early 20th century, the United States managed the Panama Canal, a pivotal maritime route. However, the decision to relinquish control to Panama in 1977 resulted in significant political backlash from various factions within the U.S. and concerns over Panama's governance. Critics viewed the transfer as a loss of American strategic interests in the region. Similar to CK Hutchison's port sale, the decision had broader geopolitical implications affecting international relations and economic strategies. 3. The 2016 Brexit referendum. The United Kingdom's decision to leave the European Union was driven by various factors, including concerns over sovereignty and foreign influence on domestic affairs. As the ramifications of Brexit unfolded, significant backlash arose from both pro-Remain and pro-Leave factions regarding economic and political stability. The political discourse surrounding Brexit reflects underlying tensions between global economics and national interests, akin to the backlash CK Hutchison faced in China, where a corporate move sparked a broader political and public reaction. Future outlook: CK Hutchison's risky port ventures and implications for international business relations. CK Hutchison's recent decision to divest its port assets has not only generated substantial political backlash in China but has also raised critical questions regarding the future of foreign investments in the region. As the geopolitical climate evolves, several predictions can be made about the impacts of this decision on CK Hutchison and the broader landscape of international business in China. 1. Increased scrutiny of foreign investments. The backlash against CK Hutchison's port sale signals a growing trend of heightened scrutiny on foreign investments by the Chinese government. Moving forward, foreign companies may face more rigorous regulatory hurdles and increased oversight when attempting to enter or operate within the Chinese market. This could lead to a more cautious approach from international firms considering investment in China as they weigh potential political risks against potential rewards. 2. Shift in public sentiment towards foreign businesses. The public's reaction to CK Hutchison's actions reflects a broader sentiment that is likely to intensify. As state media continues to portray foreign companies negatively, particularly those that make decisions perceived as detrimental to Chinese interests, we may see a rise in nationalist sentiment among consumers. This could result in diminished market shares for foreign brands, as local companies may gain a competitive edge by appealing to patriotic sentiments. 3. Re-evaluation of strategic partnerships. CK Hutchison's decision has implications not only for its own operations but also for its strategic partnerships within China. The company may need to reassess its collaborations with local firms and consider how its reputation has been affected by this backlash. Future partnerships may require more transparency and assurances of alignment with Chinese economic interests to mitigate potential backlash. 4. Impact on global supply chains. CK Hutchison's divestment from significant port assets may have ripple effects on global supply chains, especially in maritime logistics. As companies re-evaluate their reliance on ports and terminals operated by foreign entities, there could be a strategic shift towards fostering local partnerships or investing in domestic infrastructure. This could enhance regional supply chain resilience but also complicate cross-border trade dynamics. 5. Geopolitical tensions in corporate diplomacy. The political ramifications of CK Hutchison's port sale may lead to increased tensions between China and foreign corporations. Companies operating in China might need to engage in more proactive corporate diplomacy, navigating complex political landscapes while advocating for their business interests. This may include more engagement with local governments and communities to ensure alignment with national priorities. 6. Potential for policy changes. In response to the backlash against CK Hutchison, the Chinese government may implement policy changes aimed at protecting national interests in critical sectors such as logistics and transportation. This could manifest as tighter restrictions on foreign ownership or more stringent operational guidelines for foreign companies. Firms must stay vigilant and adaptive to these evolving regulations, which could significantly affect their operational strategies. 7. Long-term repercussions for CK Hutchison. For CK Hutchison, the decision to sell its port assets may have long-term repercussions on its reputation and operational viability in China. The company may face challenges in regaining trust and support from local stakeholders. If the backlash continues to escalate, it could result in a strategic pivot, forcing CK Hutchison to reconsider its overall business model in Asia or even consider divestments in other regions. 8. Evolution of the global maritime industry. The CK Hutchison case may also serve as a bellwether for the future of the global maritime industry. As geopolitical tensions rise, companies may seek to diversify their operations away from politically sensitive regions to mitigate risks. This trend could lead to a significant reshaping of global trade routes and maritime logistics networks as companies prioritize stability and predictability over potential high-reward investments in volatile regions. Conclusion. CK Hutchison's controversial port asset sale exemplifies the intricate interplay between business decisions and geopolitical dynamics. As the future unfolds, the implications of this decision will resonate across various dimensions of international business, influencing foreign investment strategies, public sentiment, regulatory landscapes, and the operational frameworks of multinational corporations in China and beyond. Companies must navigate these complexities with foresight and agility to maintain their competitive edge in an increasingly polarized global market.